Okay, now we're live. All right, I want to thank everybody on YouTube for attending. I appreciate that. And thank you to the GoToWebinar crowd, too. We'll start in about 2 minutes. Now the stream is up and running, we should be okay. Or one day is Thursday. Let's try that again. Hello, one day is Thursday, January 25th, 2024. This is the week and charts. Obviously, I want to thank all you guys and girls for attending tonight. I appreciate you taking time out of your busy schedule to be here. So what are we talk about? Well, obviously, current market conditions, as usual. I have plenty to say about that. Your questions on trading. Good morning, Matt from Australia. Your favorite stock and crypto picks. Just put your stock picks in one at a time and hit carriage return, if you don't mind. I guess I'm showing my age. And we'll get to those when we get to the live charts. If you want to hold off, just in case I overlook them, you might want to wait until then. But anyway, I want to continue my series on things that I wish someone would have told me a long time ago. Also, I have a lot of crypto examples from this week, and not all great. And I do want to show you them, though, because it really helps to explain trading. So it's not about the crypto, it's more about the trading. And trading is trading. And as I preach, crypto is a good way to get your reps in. If you want to attend these webinars live, you can go to YouTube at Dave Landry. Right now, they're on GoToWebinar Live, too. You can register for that at davelandry.com/webinar. And there's some other ways to reach me. There's a disclaimer screen. As you know, you can lose money trading, or, as often sum it up, all predictions about the future and a lot of stuff can happen between now and then. So it's not about crypto. Trading is trading. So let's take a look at some crypto trades from last week. So here's one, and there's the trades down there. And like I've been saying, I'm not betting the form on this. I'm just kind of having fun on it, and I'm trying to see if I could parlay a small account, and it's something to do. So I bought it here. Now this is a relative strength play. Relative strength, I'm just buying the strongest pairs. Lately hasn't been a fantastic market for that. It hasn't been a fantastic market in crypto, but things changed really quickly. And by accident, as I mentioned last week, I found cryptobubbles.net, and I have no idea who the website belongs to or anything, but it's kind of a cool thing. When they're all green, that's usually a good time to do your RS trading. And when they're all red, it's usually a time to sit in your hands. Also, as mentioned last week, Bitcoin could be a really good bellwether for that too. And Bitcoin's getting a little iffy in here. Jim, I'm not sure what you're asking. Bitcoin equals minus TFM means it's not trading, or you mean the TFM 10% system? But anyway, in this particular case, I bought it because it was going up. It shot up. It hit the IPT the next day, and then it imploded, which is fine with me. If you could make 20% on half your position in one day and scratch out, that's fine. That's what I call better than a poke and the eye trade. Now, the ultimate thing we're doing here is to establish some longer term winners. And I only really have one longer term winner, if memory serves, and it's up around 500%. And that's the ultimate goal. But anyway, you have to be willing to get in, you have to be willing to get out, and then say next and move on. Here's another one, nice uptrend here. This is a little bit more akin to the core methodology. The core methodology, we're trading pullbacks. The relative strength trading doesn't happen that often. Now in crypto, you get these coins that are just going crazy, or tokens, whatever, shit coins. And that's when you could just go in and buy the strongest pairs. And again, lately it hasn't been like that. Like late last fall and early this year, it was, but now we're kind of more back to the core methodology. But anyway, you can see nice little pullback here. The buy was here, IPT, and it didn't quite hit it. And we'll take a look at the live chart here in just 1 second. And this is one problem I've been up against a lot lately. And I guess what I should do is I should set an alarm when it gets fairly close to that IPT and not split hair. So that's something I can improve upon. So far, this is a near miss. Here we have another near miss. You can see nice uptrend and almost pulled back to the 30 EMA. So it's almost a Landry-like pullback. This is sort of a textbook looking setup. You've got a nice gradual uptrend. You've got a nice base. It breaks out of the base. I need to go back and look to see if I played the relative strength back here on this one. But anyway, nice little pullback, almost to the 30 EMA, almost a textbook Landry-like pullback, except that it didn't actually touch the EMA. But still, good looking setup nonetheless. So I bought it here, and the IPT is here. And so far, it has not hit that IPT. So that could be another near miss. And as I'm doing this presentation, it reminds me that, again, I probably should be setting some alarms. Okay, the buy for ENS was right here. And again, this is just a case where it was the strongest pair at the time. It was going up, and all the other pairs were going up. And let's see what that date was. That's early this year. Yeah, earlier 3 weeks ago, I guess. Things were a heck of a lot better. IPT, I've been using the initial profit target. That is, I've been using 20% on these. I think as the market matures, I will probably do something like I do with stocks, where I'm actually looking at the volatility of the stock. Obviously, the shitcoin, I should say. Obviously, it's something like Bitcoin. The 20% profit target might not be a good profit target because it's not as volatile as it used to be, and it's not as inefficient as it used to be. Anyway, so flipped out half, and then this turned into, yet again, a better than the poke in the eye trade. This was 58% move in a couple of days, which was really, really cool. Unfortunately, I got stopped out, and that's where you got to shout next one more time. So here's another one. This is a relative strength play, and you could see that it was just making new highs, and that's it's easier said than done, but sometimes it could be quite easy. You're just buying the strongest ones, and that's it. And that's pretty much it. There's a few caveats, like this one has a few long tails in it, but not too many. Usually when they have these long tails, super long tails, it means that they're kind of thin, but it really didn't have long tails until after I got in. So I got in here, flipped it out at the IPT of 20% within, I think it was like 2 days, and then I got stopped out on the remainder. So it is what it is. I'd like to see, obviously, some of these take off, but eventually, the point I'm trying to make as far as the better than the poke in the eye trades is, if you keep chipping away at it like this, eventually you're going to capture that 600 or 700 or 800% or 500% move. In fact, here we are right here. You can see I just bought this one because it was going up. Now, I don't know if shitcoins are exactly like IPOs, in that IPOs, you could actually just buy the new closing high within the first week sometimes, or at the end of the first week, I should say, the buy at B pattern that we use for IPOs, because they're wonderfully inefficient. The only thing I think you'd have to watch with the altcoins, I guess, is I should call them, but I call them shitcoins because it makes me really cognizant of the money management, how much risk I'm putting on the line. And they might all go to zero, but as a trader, who cares, right? But anyway, I wonder, and it's been my experience so far, that the newer pairs do tend to take off, at least initially. And this is a bit of an anomaly. Usually they don't run 600%. They'll run up 100 or 200% and then come right back in. But anyway, the buy was here, the IPT was here, and half was sold. And then those are the trades. And you can see that so far so good here. In this particular case, I think I took a little bit out here and there. I kind of mined a little off, so to speak, and put it to Bitcoin. But you can see now it's getting fairly close to stopping me out. And I have a very liberal stop in there. My goal is to ride out these longer term trends. To those who are newer to my methodology, remember, we're going in for a swing trade. We're getting that partial profit out, and then we're trailing a stop on a loose basis, and that gets looser and looser over time as the market moves more and more in our favor, in order to hopefully, and I just said hope, but hopefully capture a longer term trend. So maybe it's time to say goodbye to an old friend. Little heirloom effect comes into play here. That's a little behavioral science or behavioral finance, I suppose. And that means the longer you hold something, the more attached to it you become. All right, just a couple things. The balloon is off the rose for crypto, at least for now. But I would say check back often. A few days ago, that crypto bubble screen I was just talking about was all red. It just was nasty looking. And then a day or two later, it was all green. And I was able to put on a couple of those trades that I just showed you. So you definitely want to stay on top of the situation. Now, based on Bitcoin, which is a bow tie to the downside, we'll talk about that in just 1 second. Jim's asking about the TFM 10% system in Bitcoin. I'd recommend that you don't do that. Maybe adjust your parameters a little bit if you want to experiment with it, but as a general statement, I don't think it's a good idea to do that. And when we get to the live charts, I'll pull up Bitcoin and we'll take a look at that. But based on Bitcoin and crypto in general, now is not the best time for the relative strength trading. Now, you could pick your spots carefully. There's one or two here and there, and I just showed you a couple that I was able to pick up last week. But for the most part, there's not a whole lot in there. And you also notice that there were not as many long-term positions. Last week, I had a bunch of long-term positions still on. And again, those were established by establishing a short-term position and then working my way into that longer-term position. But most of those stopped out except for TIA. Now, relative strength trading is a lot more fun. And I know we're not in this for fun, but you're just flipping in and out of these, and as they're banging out the new highs, you're getting in them. And when you're in a rip-roaring relative strength market, which comes and goes in crypto, it's only happened a few times in stocks, like 1999 and a few other times. But in crypto, it seems to be this revolving bull to bear market cycle. I did a presentation not too long ago where I showed a pendulum swinging from bull to bear and back and forth, and that's kind of how the shitcoin market is. But anyway, relative strength trading is a lot of fun, but the core methodology is more sustainable longer term. So you're probably going to see more of the pullbacks and things like TKOs, Landry-like pullbacks, bow ties, etc. longer term, except, and the big exception, I guess, would be when everything begins to sort of take off again. And by the way, breakout trading is a tough way to trade because you're going to be wrong a lot unless, again, you're in a rip-roaring bull market. All right, any questions on any of that before we jump ahead? So, as I've been saying, I guess it was about 5 weeks ago, I woke up and I started writing down things that I wish people would have told me about trading a long time ago. If you go back about 4 weeks or so, you'll see the initial presentation where we just kind of ran through all of these. And then lately, I've been working my way to kind of flesh them out one by one. And then in the meantime, I keep thinking of newer things. So we might be stuck on this presentation or this series for a little while. One of the things that's kind of interesting is it's harder than it looks. And I think a mechanical system would be a good way to show you this. And then I want to show you something with my core methodology. So here's the Qs, and this is the TFM 10% system. And when you're green, you're less than 5% away from the 50-week closing high. When you're pink, you're greater than 5% away from the 50-week closing high. So this is 0 to 5%, this is 5 to 10%, and this is greater than 10%. As a general statement with indices, not necessarily Bitcoin like Jim's asking about, because Bitcoin might move 10% in a day, right? Whereas an index, it could move 10% in one day, and if it does, you need to get out of the way because something really bad is happening. And I think that happened. I don't think it dropped 10% in one day back during the pandemic, but we did have a pretty sharp drop that triggered a signal. I was amazed at how quickly it triggered a signal. But anyway, sell signal is a close 10% or more away from the 50-week moving average, simple moving average, and that's on a weekly chart, and it also has to close below the 50-day simple moving average. So let me say that again. I don't know if I said that properly or not. I should have left the rules in here. You can get the rules from all my other presentations. A close 10% or more away from the 50-week closing high and a close below the 50-week simple moving average. So down here, like right there, that would have been a sell signal because you're more than 10% away from the 50-week closing high, and you're closing below the 50-week moving average. Buy signals are a little bit more stringent. You need 2 bars of Landry light above the 50 simple. That's it. And you have to be within 10% of the 50-week closing high. So as long as you're above this red zone, you're good to go, provided you have 2 lows greater than the moving average. That's 2 bars of Landry light. That's pretty easy peasy. So for S and Gs, I did a little back testing right about the time the signal was about to trigger. And I thought that the Qs did fairly well, and I figured it'd be worth a shot, especially since they're a little bit more volatile than the S&P 500. So for S&Gs, I bought 100 shares, not knowing whether or not I'd be able to follow a mechanical system or not. But I thought it'd be kind of an S&G type of thing. And as of this screen capture, at the time, the Qs were at all-time highs, 424.70. And I got in at 319.49, as you just saw. So I have $105 plus, knock on wood, come in, in this open trade. I never dreamed this thing would run 25%. But anyway, you can see 10K and counting, easy peasy. And that's the thing when you're doing your research like this, and you're looking at all these little simple systems and simple patterns, you're like, wow, I could just absolutely print money with this stuff. Well, the map is not the territory. Once you get into the actual trade, you'll find that it becomes a lot tougher. And forgetting about the psychology of actually getting in and actually taking the signal, which I'll touch upon in just 1 second a little bit. The bottom line is once you're in, then a whole new host of emotions come into play. Now, I'm just putting some things in here that I think people may have been thinking should they have taken the signal, and some of it is based on what I was thinking. So I remember a few weeks in and being underwater with this thing. I think it was like a month in, and I'm like, holy moly, this kind of sucks, right? I'm supposed to be making money on this trend following thing, right? And then the market took off, and I'm like, wow, I'm up $6,700. And that's when you find yourself wanting to mentally monetize the trade, which brings on a whole nother set of problems. And then what happened? Well, it imploded, and I lost, so to speak, $4,500. And at that point, I'm like, damn, this is a pretty ugly drawdown. And if I go all the way down to here, I'm barely going to even be profitable on this trade that was just up $6,700. Now, keep in mind, this is not the core methodology, and I don't have any partial taking of profits in here like the core methodology. So if you go back and look at those crypto trades, I'm taking that IPT, that initial profit target, off. So the worst I could do is break even the rest of the trade, and that could set me up for a longer term winner. Now, it doesn't happen that often, but every now and then you'll catch, like I just showed, that 500% winner. And I think there was a few more that went 200 or 300% before finally stopping out. But anyway, so you watch all that money evaporate, and then now the stop would be at 357 and looks like 65. So let's just say it's 360, 357 round numbers. Well, that's a long ways down. And if you're looking at your 10K and again, I'm mentally monetizing. I thought this was an S&G trade. That's 100 shares. Who cares, right? Well, $10,000 is starting to become real money, right? That's 5 figures, right? And if it stops out following this system, I would have to give up $6,800. Now, you're probably thinking, well, Dave, why not take half? I probably should, okay, because $10,000 in a few months is nothing to sneeze at, especially on an S&G type of trade. But for now, I'm going to just let it keep going and see what happens by following the system on a mechanical basis. Now, keep in mind, a lot of what I do, or 99% of what I do, is not mechanical trading, although some people say there are things I do that I sort of execute in kind of a mechanical way. And I know a lot of, as I've said before, mechanical traders, they claim to be purely mechanical, but they tend to be a lot more discretionary than they let on. Anyway, so here's an IPO, and this was recommended in my core trading service. This is the first pullback or first deep retracement, and it's a wonderful pattern to trade. Now, with the somewhat lower price IPOs, less than $30 a share, buy at B is my favorite pattern there. You're just buying out of 5 at the highest close for the first 5 days. So if the highest close, let's say, was on Wednesday at $10 a share, and on Friday it closes at 11, comes public on Monday, then you would actually buy, with a few caveats, you'd buy going into that close. And that has been a wonderful pattern so far. We hadn't had a lot of action lately with it. It's weird. The IPOs have gotten really thin lately. I don't know why that is. If somebody knows, let me know. Anyway, so there's all the parameters there, and I'll show you where to get those in just one second. Entries here, the stop is down here, and the initial profit target is up here. So now all you have to do is just follow the plan, and that's why I say all you have to do is the throwback to when we lived in the country and there was always something broken, and my wife was always like, all you got to do is just, get your little wrench and, tighten up that leaky pipe. Well, you tighten up that leaky pipe, and then the fitting breaks off, and then you shut the water off, and then you're out of water, and then the water also goes through the heating system, so then you're out of heating and cooling, and it becomes a really big mess really fast. But yeah, on the surface, it looks a lot easier than it really is. Now, in this particular one, I don't know if it was this one, but I do remember coming in with one of these stocks, and it might have been this one, but I would come in day after day after day after day, and I'd put my order in, it would never trigger, never trigger. Now, with an IPO, I'm a little more lenient on the triggering, because as they move into new highs or approach new highs, they could really take off. And sometimes that takes a little while. They consolidate a little bit. They get a little bit ahead of themselves. And that's kind of why the first deep retracement works fairly well. The first pullback, however you want to look at it, depending on the depth of the pullback, obviously. So I was really lenient. It's like I waited and waited and waited and waited and waited. And I put in my orders every day. And again, I don't know if it was this one, but it was one like this one where I put in my order so many days, I just said, this thing's never going to trigger. And I didn't even bother. And then luckily, somebody at Facebook pointed out that it had triggered. I'm like, oh, thank God. So that could have been me saying it's never going to trigger. And then I didn't say this, but I do remember a few days into the trade, actually by the end of the day, I should say. So it triggers, and then it immediately reversed. It took off a little bit, gave me a little false hope, then it came right back in. And I know I wasn't the only one. I was kind of thinking about this, and this is one of those. I knew I should have taken this trade. I'm down $573. That's per 100K based on the model account. So F this, I'm out. And that's what goes through a lot of people's heads, because they're told to cut the losses short. Well, you have to be willing to ride out the normal volatility, and you also have to be willing to follow your plan. So, of course, the next day it bottoms out, and then it begins to take off. So on the day it hits the IPT, and you bailed out at a small loss because you think, well, I better cut my losses short. That's what they all say, right? Well, that's the way a lot of people do go broke, is trying to get their risk so tight that it's within the normal volatility of the stock. But anyway, so then you could see that it went sideways. It didn't stop out. It came fairly close to stopping out. But by this time, you're thinking, 3 months, seriously, with no forward progress? It's like, why would you sit in this stock so long? Well, because the stop has not been hit. Yes, it's lost momentum. Yes, it's going sideways, but it might just be catching its breath. It might have gotten a little ahead of itself. There are no time stops with the core methodology. And then you can see it took off once again, and you're probably thinking, why can't I just follow the plan? And then what's happened in more recent times? So, well, it started going sideways again. It's going sideways for about a month, and now you're thinking, why am I hanging on to dead money? If you want to see the archives of these trades, you can go to davelerner.com/archives. If you want to see them live, davelerner.com/trading service. Okay. So continuing on with this series, it's not as hard as you try to make it. And whenever I work with someone who's just getting into it, they're on the holy grail hunt, they're trying to figure out every angle. You could take one little simple pattern of mine, like TKOs or Landry-like pullbacks, which I'll talk about in just 1 second, the Landry-like pullbacks, that is, and you could probably do okay with it. And then you could build upon it from there. As Linda Rasky once said, all you need is one pattern to be successful. So people complicate it far more than they need to. And like we said a few weeks back, the market is trading on emotions and you're trading on emotions, which we'll get to. And you just have to wrap your head around that. You're trading traders, not markets. A lot of times there won't be a lot of logic, and that's one of the things I probably need to. That's number 5. Logic doesn't often apply, and we'll get to that. Anyway, I think a trading system should be reduced to a cocktail napkin, or should be able to be reduced to a cocktail napkin. And this is the cocktail napkin when I speak in person that I give out, and that's pretty much the entire methodology. And one thing that never ceases to amaze me is that some of my biggest winners come from the simplest setups, something like a Landry-like pullback or even a bow tie, which is slightly more complex, but it's really not that complex. But you can see this one hasn't taken off yet, so this will be a good example of a simple setup, and we'll see if it works, okay? So there's the parameters there. And you can see we had nice Landry-like. That means the lows are greater than the moving average, about 40 days. Nice trend, accelerated trend. And then it pulls back to the moving average, Landry-like pullback. That's the whole pattern right there. Now, ideally, you want some acceleration, and you also want to look at the chart. I mean, it might get above the moving average and trade sideways. That's not what we're looking for. We're looking for a market where you can draw a big blue arrow on it like I have here, and then waiting for that pullback to the moving average, or just a pullback in general. Anyway, the entry was here, the stop was down here, the IPT was here, and it's since triggered, but we'll see how it shakes out. Now, last week I said the markets are emotional. Well, you're emotional, okay? And that's every one of you. It's universally preached to eliminate your emotions. Well, guess what? You can't. And that's neurology. I got in a fight with one of my friend's wives. I say the other night, it was probably a year ago. And she said that that's not true, that you can make decisions without emotions. And it's like, well, it's neurology. I can't. It is what it is, you know? Now, I was looking for some slides on this, and I found a presentation I did back in 2017 or 19. I forget. One of those. Anyway, it's been a few years, at least 4 or 5 years. And the title of that was, "Hey, Lizard Braid, is this part of your anatomy controlling your trading decisions?" So not only is there a trading psychology involved in trading, there's also a trading neurology. And neurology is something I only learned about, I keep saying not that long ago, but it's probably been about 14 years. And I was speaking at Golden Gate University to the San Francisco Technical Analysis, I think it's TSAA, at one of their meetings. And Denise Scholl spoke before me, and she talked a little bit about the neurology of every decision has an emotion attached. So I'm not a neuroscientist, but I did stay at a Holiday Inn Express once or twice. So there's this thing in your brain called the amygdala, and it's very small, and it's responsible for the perception of emotions such as anger, fear, and sadness. And I like this definition because this definition actually gives us something we could work with. Now, in the original presentation, I had a snake, a picture of me with a snake, and I forget why I had that in the presentation. But I do remember, as I'm thinking about it, we were cleaning out the house. I was cleaning out my garage, which was a mess. And when we were moving, and I had seen this huge snake skin in the garage earlier, and in the day. And I reached up, I'd forgotten about it. I reached up and I was pulling some stuff out of a cabinet, these little handles that are used to pick up things. And I grabbed one in each hand. So both my hands were tied, and I pulled that snake into my chest. And I had a diaper change moment. Okay. The point I'm making there is when there's something threatening like that, you don't have time to think about it. So basically, I jumped about 4 feet and ran, like a schoolgirl. And then I eventually caught the snake with a grabber. I wasn't brave enough to grab with my own hands. Anyway, long story endless, the amygdala, all it knows is fear. And it immediately triggers and has you swerve out the way or jump out the way if you're getting ready to get hit by a car or whatever, which is great for life, but in trading, not so much. So you get this immediate, really fast response, and it kind of hijacks the rest of your brain. And again, which is great for a flight or fight situation. You're a caveman, saber-toothed tiger comes up, and you're like, okay, I think I can take him, or you know what, I better run. So you really don't have a whole lot of time to contemplate your navel. What's that big word? It's about that big that means contemplate your navel. Stick it in the comments below if you remember what that is. Geez, I got an article where I talked about that. But anyway, so again, the amygdala is great for the caveman, but in modern day situations, not so much. Okay. And one thing that I often think about is you're stuck sitting in front of your screens, right? In my case, I try to stand for all trading, but you're standing in front of your screens or sitting in front of your screens, and the stressor comes out at you, right? The market. And last week we talked about there's no fear in the markets. I know, ha ha. But the stressor comes out, and you can't run away. You can't get away from it, and that makes it really, really tough. And I think that's a lot of neurology we have to really wrap our head around to deal with the situation, because we can't run away. So we need to put commitment devices in place, which we'll get to. And then you also have to figure out ways to just follow your plan. Now, you can't make decisions without your amygdala, and you can't make decisions without emotions. Now, I'm just kind of giving you the Reader's Digest on this, but every decision has emotions and stress attached. And as I've said quite a bit in Denise Scholl's presentation, she talked about the fact that somebody who's been institutionalized, which you probably will be if you don't have emotional processing, which means you can't make decisions through injury or illness. And a doctor will say, okay, well, would you like to meet next Tuesday or next Wednesday? And they'll go through all the reasons they should meet on Tuesday and then all the reasons they should meet on Wednesday, but neither one has a consequence or an emotion attached. And then they'll actually start the process over again, and they arrive at a stalemate. So if you've been brain damaged, unfortunately, you can no longer make decisions. So you have to embrace and not eliminate the emotions, since we can't make decisions without them. So how do you do that? Well, easier said than done. But step one is recognize and acknowledge that all decisions are emotionally based, and start thinking about every decision you make in your life, and channeling Kettering, a problem well stated is a problem half solved. And I think that recognizing that there are emotions attached to every decision in life is the secret to learning how to embrace your emotions. Notice I didn't say control your emotions. And I really think about every decision. My daughter's visiting tonight. It's kind of like, well, it'd be nice to not do this presentation and just hang out, but it's like, okay, we can hang on after the presentation, and I wanted to do this presentation because it was scheduled, and for other reasons too, for you guys, obviously. So the decision to just do this had a little bit of emotions attached. So you really need to embrace your emotions, feel them, get in touch with them, and just start being cognizant of your emotions on every decision. even little decisions like what you're going to have for lunch. And that's for me, it's like, okay, like I might want to go get some fried catfish or something, but I'm going to be miserable the rest of the afternoon if I do that. So even a very simple decision like a lunch decision is going to have an emotion attached to it. You might think, well, I've been working out so hard lately, do I really want to blow it on that? So be especially cognizant of your trading emotions. I journal my F bombs. I do journal my temptations, and that's an important thing to do. And as I'll mention here in a few minutes, just a little bit of a pause can help to bypass all that lizard brain. And they call it lizard brain because that lower part of your brain actually looks like a lizard's brain. I wish I'd have thought about it. I'd have grabbed my brain. I have a brain in the closet. Maybe I should take it out. Anyway, but the lizard, it looks like an alligator brain or a lizard brain. And that's kind of like all the brain an alligator or lizard has. But journaling your temptations, and when you start journaling your temptations, like, ooh, I really want to buy this market, but it's not set up, and as I've said before, you need to watch your butts. And you just need to resist those temptations. I know, easier said than done, but by holding yourself accountable. And one big thing you can do is commit to commitment devices when necessary. A great example of commitment devices, doesn't have to be expensive. It doesn't have to be take a lot of time, whatever. But a great example of a commitment device was a friend of mine. He's getting a little pudgy as a trader because we don't move around a lot during the day, right? And he found a young kid and he said, look, I'll pay your gym. I don't know if I've told the story before, but I'll pay your gym fees. And the kid was really into working out. I'll pay you gym fees. All I asked is that when you go to the gym every morning at, I think it was 7 a.m., that you ride by my house and pick me up. And at 7:01, if I'm not sitting on the front porch swing waiting on you, I will give you $20. And of course, that kid's there probably at 6:45 waiting for 7:01 to get his $20. But that's a commitment device. And I haven't followed up with him, but I know for a while he was pretty serious about working out, and he hadn't missed a workout in a while. Success is less about making good habits easy and more about making bad habits difficult, okay? I discovered I had a bad habit of walking in the office and making a trade. I almost did it today, okay? I walk in the office, everything looks great. Well, usually I'm walking in the office after breakfast or lunch, and I was probably hangry before, and then afterwards I was feeling good, so all of a sudden everything looks great. That's the hangry judge effect that I've talked about before. I think his name is, I want to say Arley. I don't know if I have any books within reach, but he's one of my favorite behavioral science kind of guys. Malcolm Gladwell's pretty good, obviously. Who else? There's another one that of course, Tversky and Kahneman, I think. Thinking Fast and Slow guys. So those are a couple of good authors to read. And James Clear, of course. So you need to just make things difficult, make the bad habits more difficult, okay? I can tell you this, when I lived in the country, I had a brewery in the garage, I had a 20-gallon system, and I always had beer on top. And always having beer on top made it pretty easy to drink a beer, And I drink less beer and not a whole lot during the week now because I let myself run out on the weekends. And then if for me to drink beer, I'd actually have to get in the car and leave the office and go get some beer. And that's something that I don't leave the house much. Anyway, so again, Sun Tzu rears its ugly head. If you know the enemy, you know yourself. You need that fear, the result of 100 battles. If you know yourself, but not the enemy, for every victory gained, you will also suffer defeat. If you know neither the enemy nor yourself, you will succumb in every battle. And I'm going to tell you a very simple and free way to get to know yourself here just 1 second. So obviously that's Art of War. I read a few years back. It's like, oh, you old fart, stop quoting Art of War. It's getting it's getting boring. Now, one thing I would strongly recommend you do, and I tell everybody this, and if somebody's new to trading and I was like, how serious do you want to be? You want to be serious? Do your morning pages. And years ago, as I've said 1,000 times, I used to do these, and for some reason I quit. I just got lazy or whatever the case may be. And then several years ago, I started doing them again. There was a lady by the name of Julia Cameron. I think I loaned the book out that had the chapter in it, and I've only read that chapter of the book. I haven't read the whole book, but it's called The Artist's Way, and she talks about morning pages. Now, she's got some quirky things I don't fully agree with, but I can kind of see where it might be helpful. I'm just don't always fall for that kind of esoteric stuff. Like she says, make different characters about yourself. Like there's a doubting person of you, and the one that's always gung ho and disrespects risk or whatever. All these different people. I found that a little kind of quirky. For me, I just write. And you're not writing War and Peace. It doesn't have to be grammatically correct. You're the only one that's going to read it. Although I do have some funny stories where people have read some, where my daughter found some of my writings because I left them out. But that's another story there. But anyway, just don't make a big deal about it. And I'd say about 1 in 10 people, if that many, maybe 1 in 50 actually follow through with this. And it's not easy, but you'll reach a point where you actually look forward to doing them. I can't wait. I know you're going to party with me. To get up and start working on my morning pages. Now, am I holier than thou? Hell no. Okay. I cuss and I fuss. And let me see. I think I had some F-bombs today. I'm very emotional, as I've said before. I cry like a schoolgirl when I'm forced to watch a Nicholas Sparks movie. Yeah, I'm not seeing a whole. I know yesterday I didn't have any, which was a shocker. I think today I had a few Uggs. Anyway, but yeah, I'm a very emotional guy, and there's nothing I can do about that. It is what it is. And I think I said like last week, I cry when I watch a Nicholas Sparks movie or when I watch a Formula One documentary. I also have a serious problem with agreeableness. I took a personality test a while back, and I think it's Jason Williams, Larry Williams' son, wrote a book. And I think it's The Mental Edge of Trading, I want to say. And anyway, first, one of the things he said in there was to take a personality test, and that's a good way to get to know yourself. You can find a free one online. I forget the name of the one, Briggs, something Briggs. It's probably and there's one that's kind of famous, but you can find it free online. And I scored really, really low in agreeableness, and that's probably the worst trait a trader can have. But get to know yourself, do your morning pages, and take a personality test. Now, you want to slow things down a bit before your next decision. And here's the crazy thing. I think I still have it. Here's the crazy thing. And this is kind of a long story. I'll give you the Reader's Digest. But years ago, I was at Traders Expo, and Greg Morris was there. And I want to say Greg wasn't speaking, but Larry McMillan was. And Greg, knowing that we'd be there, thought it'd be a good idea to just come out to New York and visit. And so we had supper together. And he said, "What are you going to talk about tomorrow, Dave?" Greg did. And I said, "Well, I'm going to talk about how the amygdala can kind of hijack your brain, and that's all you really have to do to help avoid that is to slow down a little bit, because it only takes about 3 seconds for your emotions to boil from that amygdala, to slow it down, I should say. So it's instantaneous. You have a snap reaction. But if you can wait just 3 seconds, and Greg, before I went any further, he knew exactly what I was talking about. And Greg said, "Wind the clock." I'm like, "Excuse me?" He says, "Yeah, wind the clock." He said when he was at fighter pilot training school, in the simulators, they purposely try to freak you out so you crash it. And he crashed a few simulators. Better to crash a simulator than crash a real one, right? Real jet. And he reached a point where he's like, okay, I'm going to flunk out of flight school and never even get off the ground, literally, if I don't figure this out. And so what he did was, whenever the stuff started going crazy, he would wind the clock. And back then, they actually had analog clocks, and I don't think this is one out of a fighter jet. I think this came out of a Cessna. I got it on eBay. It doesn't work. It makes noise if you crank it. But I used to, for a while at least, I kept it on my desk, and before I'd make a trade, I'd wind the clock. And so what he's doing is he's kind of slowing things down a little bit. And when he became an airline pilot, whenever he was in a sticky situation, engine burns out or whatever, instead of immediately taking action where you could shut down the wrong engine if you're not careful, I think he would touch the dash or whatever. He would do something to kind of slow him down a minute, or not a minute, but like a few seconds, so he could act appropriately. I don't want to speak for Greg, but you kind of get the idea. So just slow things down a little bit on your next decision and the next several million decisions afterwards. And a great example of this is if you ever snapped at your spouse and then immediately think, oh man, I went too far. I should take something back. I think we all have if we've been married for a little while. But you'd be surprised. I need to remind myself about this too. But when you find yourself like getting that little quip lined up, right? Just take a few seconds and let that little Terminator thing come into your head, right? And I do these in other situations too. And you might pick, number 4 or 5 in this list anyway, but at least you carefully chose it and thought about the consequences of that decision. So slowing things down will help you a lot. So there's a lot of neurology in trading. And again, to me, there was an epiphany finding these things out. And obviously you want to plan for battle the night before. You want to do your homework, get your setup, get your entry, get your protective stop, know where your initial profit target is going to be. A lot of that's just a formula. And once you figure out the entry and the stop, in fact, I'll give you a spreadsheet for that. You'll still have to pick the stock, pick the stop, and then pick the entry. But other than that, everything else is a calculation. I forget who said it first, but it's been said before, where stress is highest when information is changing or uncertain. Well, as soon as the market opens, obviously, information is changing or uncertain. Mind Sculpt, there's a way you can mentally rehearse. There's a book that I had read years ago called Mind Sculpting. I have to read it again. I seem to remember it's pretty good as far as it relates to trading. So you kind of want to mentally rehearse these things, see yourself entering the trade, see yourself following the plan. And a lot of this stuff is kind of quirky, but it works. And then, of course, just do it. Consult your written plan when tempted to take unnecessary action. If you bust the plan, then shame. I used to say shame a lot in the webinars, and Mike Peterson, a client of mine, gave me the shame bell. So I need to put this back on my trading desk, and when I'm trading poorly. Shame. One thing we talked about, I was at Charlie Kirk's retreat years ago. He was kind enough to invite me as a guest of honor. By the way, Charlie's doing better. He's a paraplegic now, but he's doing better. And you guys on a Kirk report already know, but I see he's back to work and putting stuff out again. So good for Charlie. But anyway, Charlie was kind enough to invite me to be the guest of honor. And one thing that he was talking about was to have like a shame notebook. And it just, when you do things you shouldn't do, trading wise at least, put them down in your notebook. Now, for me, if you know a little neurology, it really helps to make you feel normal, okay? It's like, why am I so emotional? Well, we're all emotional, okay? Get over it. All decisions have emotions. Again, you have to be cognizant and you have to embrace them, accept them, and get to know yourself and do your morning pages and write, like I said, 3 pages every morning, and in your trading journal, write how you're feeling, write what you're thinking about doing, write what you're tempting to do, write when you walk into your office. The hangry judge effect, like I talked about earlier, I used to make all these walk in the office trades, stupid trades, because I was just feeling good, and I'm Dave Landry, right? And once I started doing the walk in the office, WITO, I found myself not taking nearly as many trades and keeping myself out of a lot of trouble. And the hangry judge effect, basically, in a nutshell, just said that the sentences were far more harsh for the convicted people before lunch than they were after lunch, because the judge came back feeling better. He went from hangry to feeling better. Now, you have to hold yourself accountable, commit to commitment devices. Holding yourself accountable is a tough thing. As a story I've told 1,000 times, I have a client does really well. He's a good trader, but the wheels come off the bus every now and then. And one time I said, look, tell your wife you're going to follow this trading plan that I'm putting out. I'm not the grand poobah. There will be losses. We might go 6 months, okay, and look like we're not getting anywhere, maybe breaking even at best over 6 months. And then we'll do really, really well for a while, and then we'll go back to grinding it out. I think it was Brian Gelber, that said 3 months out of a year, you're hot, you're so hot you can't sleep at night. 3 months out of a year, you're so cold, you're cold. You never know when your next winning trade is going to come along. And then the other 6 months, you make a little, lose a little, and you wonder if you're ever going to be consistent. That's a life of a trader, right? And people come in a trading service and they knock it out the park with one or two stocks and think it's always going to be that way. Or they come in, I tell them not to do anything for a month, and of course they quit, because I don't need to pay a guy to tell me to do nothing, but sometimes you do. Sometimes there's nothing to do. Anyway, so long story endless, I told him, look, just tell your wife we're going to follow the plan. Doesn't always work, obviously, but over time it will work. And went on and on and on. And then he stopped me about halfway through and he said, oh no, that would end the marriage. So he knew what he was doing wrong. And that's one of the things that I always talk about whenever I dig myself a hole in psychology, trying to explain psychology. I usually end the presentations with, well, you know what you're doing wrong? You know what you're doing wrong. Now, of course, the dead horse cliche, plan your trade and trade your plan. Okay, let's jump into crypto. Jim's been waiting patiently. Thanks for waiting, Jim. Let me change my screens over. And we'll take a look at that. Okay. All right, so let's just take a look at, so here's that RBM we talked about earlier. And you can see it was a near miss on the IPT, as was SUI. So those are the only two. This was one that I was looking at earlier. It's got some long tails in it. And I almost bought it. I don't know why I have this line in here, but I almost bought it at this line. I don't think I actually bought it. I should know that, but sometimes that's all you do with relative strength. But with these long tails in here, this one could be a little thin, so I didn't actually take the trade. Here's that TIA, just kind of chopping along in here. Let's take a look at Bitcoin, and I want to take a look at Bitcoin. You can see we have lots of Landry light here. Let's jump into ACP for that. And Jim, I'll get to your question. Just 1 second. Okay, so you can see down below I have the Landry light, and we had lots and lots of Landry light, and the market was headed higher. Okay, and now we have downside Landry light because the highs are less than the moving average. So we have 10 days of downside Landry light. So this is a market that has lost steam in here. It was obviously the buy on the news, so buying the rumor, selling the news situation, because you can see this day here was the day they approved the spot ETF, and so far it's been downhill since. I'm still bullish longer term, but as a trader, I have to believe in what I see and not in what I believe or want to believe. So we got 10 bars of downside Landry light. That's not a good thing. We'll take a look at the bow tie proper order, and you'll see that we have gone from green, which means 10 is greater than 20 and 20 is greater than 30. These are simple and exponential moving average respectively. So now we have a bow tie sell signal in Bitcoin. And if we take out this low here, I would begin to get concerned, but now's the time to maybe pull your horns in a little bit if you are bullish on Bitcoin. But you can see the green is good and the red is bad. And if you just follow the red and green as a general statement, now be careful because there will be a little lag, like right here, it turned green, but notice that this market didn't keep on going higher. So use the indicator or illustrator, as I call them, to help you, but make sure the chart confirms what the indicator is saying, okay? And right now it does, because on a net basis, we had a pretty serious slide in Bitcoin, and we have a bow tie to the downside. So that's looking a little ugly. Now, Jeff's asking about the TFM 10% system and Bitcoin. And I think we talked about this before. Let's put the zones in. By the way, all of this is free with my plugin, which is down here. And I keep threatening to charge for it, but it's free for now. So if you do have ACP, I'd recommend you download that plugin. So a sell signal with the TFM, it's actually further away than I imagine it would be. Let's take a look at, let's back it out a little bit. So this line here, the red would be 10% away from the 50-week closing high, which was probably right there. Yeah, so that's this line. Nope, right here. So that's 43,050. And we're now 10% away from that. But remember, it also has to close below the 50 simple moving average. Well, Bitcoin is so volatile, it could really get a long ways away from that 50-week simple moving average. So the sell would be way down here. I would not recommend this system in Bitcoin, and something like we said earlier, like the Qs that don't move around quite as much, something like this could really help to keep you on the right side of the market. So you can see last 10 years, when you get into the red zone, you want to get out the way, okay? And stay long as you're above the red zone. And as a general statement, that will keep you out of a lot of trouble, okay? But Bitcoin is too volatile. I think your parameters would have to be too wide. Now, down the road, when Bitcoin matures with all these ETFs and all this other stuff out there, it's going to become more and more efficient market, and it won't be quite as volatile. So maybe then it might be worthwhile. All right, let's shift gears and hop into the stock charts, the live stock charts, that is. And then we'll do, if you guys want to talk about any individual stocks, feel free to start punching them in now. I'll be happy to take a look at them for you. Jim, what are you saying? Is 40 a typical pullback point? I'm not sure what you're asking on that one. For Bitcoin, I don't know what you mean. So the P's today on a micro level, we did end a little higher, about 0.5%, and that's enough to keep them at all-time highs. So as a trend guy, I'm not going to argue with that. So far, so good. In the P's, I'm sure we have a plethora of upside Landry lights. Take a look at the NASDAQ. NASDAQ managed to close a little higher in here. Now, these indices are overbought and due to correct, so it wouldn't surprise me if we saw some corrective action. But the NASDAQ is right at these multi-year highs, and it doesn't have too far a way to go. It's maybe 1 or 2 days, good days of getting past the all-time highs or making all-time highs. Let me show you something real quick with the GBTC. GBTC looks better than Bitcoin, but I did a presentation for your Daily 5 for stock charts yesterday. And one of the things I pointed out was that some of this rally was likely fueled by the fact that the premium was coming off. It had like a 20-something% premium a few months ago, and now the premium is almost scratch on GBTC. So some of that probably came off, or all of it came off actually, And so this chart, I think it's a bit of a misnomer. It looks a lot better than Bitcoin. So if I was just seeing this, I would say this is set up and worth a shot as a trade. And it's still, as a pure technician, I probably should not be judging it based on the underlying, but it's complicated. I think in this case, I think you also have to look at Bitcoin when you're looking at something like GBTC, obviously. All right, let's take a look at the Rusty real quick. I'm kind of sick of looking at the Rusty. It just can't get out of the stupid wide and loose range, okay? So I don't know what's going on here. I like to see it get out of this range, and then it has a lot of overhead supply to deal with. But yeah, I think all would be great in the world if we could get out of this range and keep on keeping on. Energy's bounced quite impressively today. They're rallying nicely off the bottom of their range, but they're stuck in a range. And if you look within energies, like the service stocks, like OIH, obviously they remain in a pretty serious downtrend. So I would avoid the energies. GBTC bleeding billions per the Wall Street Journal. Could you explain what you mean by what? Could you just give me a thumbnail on that? What's going on? They're not making money due to fees or whatever. I know that fees are going to have to come down. Most areas looking pretty good. Here's the fence. The fence stalled out a little bit in its pullback. If it gets above this pivot point, that would be a good thing. If it keeps dropping and drops back into this prior base, that would obviously be a bad thing. Let's take a look at, if you take a look at financials here with the Morningstar industry groups, they're just shy of their prior highs in here. And I forget which one, what's the, is it XLF? If you take a look at the spiders, they look a little better. They're right here at these all-time highs. Outflows, okay, people are selling it. Gotcha. Yeah, can you shoot me a post the link in the Facebook and I'll take a look at it. Most areas are doing pretty good in here. Health services pull back, still looks okay. Defense, I think we just talked about that one. Same thing here with the Morningstar groups. If it pulls back into this base, I'd be concerned. M&C or the home builders have been doing pretty good. They recently have a bit of a knockout move. I'd actually like to see more of a knockout move. So far, so good there. Leisure's kind of hanging in there, not too far from all-time highs. So that's a good thing. Let's take a look at the semiconductors. Semiconductors sold off a little bit today, kind of Flatsville by the end of the day. Let's take a look at SMH. I think SMH is right at these all-time highs. It actually ended up a smidge, so that actually keeps it at all-time high. So that's certainly a good thing. Most things technology related look pretty good, obviously with the Qs, knock on wood, at all-time highs. So overall, things still look pretty good. Spot uranium is looking pretty good. Let's see. You see uranium just kind of pulling back a little bit in here. These are the miners. That looks pretty good. The physical uranium actually looks a little bit better than the uranium stocks right now. So that's one area that's doing okay. And again, most technology is doing pretty good. So as soon as we get a pullback in the overall market, we should see a plethora of new setups. And I'm just sort of biding my time, waiting for that pullback to see how it shakes out. Okay, any individual stocks you guys want to look at? I know we occasionally talk about stocks in Facebook. I know since the group started, we don't have as many questions on stocks. Let me check in with my YouTube brethren and see where we are. Okay, kind of quiet over there, no problem. I hadn't forgotten about you guys. All right, any stocks going once, going twice? Well, obviously, I want to thank everybody for attending. I appreciate you taking time out of your busy schedule to be here. Anything unanswered, davidlandry.com. Join me next week here, davidlandry.com/webinar, or just keep an eye out on my YouTube channel for the next time I go live, which is Thursdays at 6 o'clock. Did you get CCTG? CCTG. Did I get it personally? No, I did not. And why did I not get this one? Let me see. Let's see. 1, 2, 3. What's the volume on that? No, it had good volume. Nope, I overlooked it. Dang. Okay, so here's your buy at B. 1, 2, 3, 4, 5. So the buy, as scary as it would have been yesterday at 1484. So yeah, that's a good looking buy at B. Yeah, I missed that one. I don't know why, but shoot. Okay, again, thanks everyone, and may the trend be with you. You're welcome.